Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 17th of February. And starting off with the FTSE 100, where we've had double, triple bounces for this market, 87.30, the low today, 87.25, I think on Friday, 87.30, which is the mid-channel line there, which is the previous target that we had. Above 87.30 on an end-of-day close basis, looking for 9,000 by the end of next month. Worst case on the downside now towards 8,600 in that uptrend line from last month. In terms of the technicals, or at least the RSI, we've had three bounces for this market at and around the RSI 60 level, which hopefully will be a leading indicator on the upside. Next up is the DAX, which, contrary to all the reports, is actually called the fundamental reports. The country seems to be dying, but the stock market going through the roof. Which is a nice combination. Here you can see we got this rising trend channel there from back in November. We can probably get rid of the old red channel there from October, given that this is just up and away at the moment. Unfilled gaps to the upside after the bear trap island reversal. I don't think I've ever seen one at the highs, and obviously that is a very strong signal. Presumably because everybody was shorting around 21,700 and then got a kick in the teeth. Current position is that while we're above the latest gap there, 22,000, looking for the top of the rising trend channel there, 23,700 by the end of next month. And interesting to see how many blue candles we've had there since the start of the year. In fact, very few red candles, I suppose. That is the logical conclusion. We do break down the worst that any rug pull could give us. Maybe like a deep seek spoof would be down to the 22,000 level in the floor of that channel. Next up is the Dow, which is still consolidating between the 50-day line around 43,800 and 45,000 peaks. Still waiting for and hoping for 46,800 on the top of that rising trend channel from March last year by the end of next month, i.e. by the end of March, and hopefully we'll get an end of day close back above 45,000 sometime this week. RSI holding above neutral 50 at 55. Moving on to Bitcoin, which is mysteriously becalmed at the moment. We've got an uptrend line there running through 94,600, and we're between that and the 50-day line there, just shy of 99,000, so very tight range, waiting for an explosion of volatility. But at the moment, we've got the RSI below neutral 50 at 44, so the buy is still a little bit towards a final test of the 90,000 area before this market can then head higher. A lot of excitement for gold at the moment, or at least physical gold, but the current situation on the daily chart here is that we are testing the initial February resistance around 2,900. Could probably stretch down to the 2970 at 2870 area, which was the initial February support, and just be slightly wary of a rug pull for this market back towards 2,800, but hopefully we'll stay above 2870 and recent support. Moving along to pound dollar, where we still have the enjoyment of Deutsche Bank getting the call here completely wrong. Called the low there on the 10th of January around $1.22, and the current situation is we're not only back above the 50-day line there at 124.80, which is our sort of trading point at the moment, but also risk going back above a broken support line there at 126.80. We get above that, which is our initial target at the moment, then we could have a fully fledged return to the best levels. But let's go for 126.80 at the moment without getting too carried away. On the downside, an end-of-day close back below the 50-day moving average, 124.70, could take us back to 123.40, but we're not expecting anything lower than that previous resistance earlier this month. In fact, not really expecting this market to go back below the 50-day line. Moving on to the stocks, and excitement in the air for Audioboom, which seems to be determined to break all the targets that have been set for it. We were looking for this market to get up to 620, which is the top of that rising trend channel from September. And in fact, we've the high today 621, so hit that on the nose. Next level up would be the upper parallel of that rising trend channel from September, so perhaps up to £8.10, not 810 pounds, £8.10 by the end of next month, while we're above recent support around the 530 level. The point to note at the moment, I suppose, is that we've had relatively little retracement since the breakthrough, the initial January resistance around £4.43. So looking very well placed at the moment. I suppose the only problem is that we have another, £16 to go to get back to the best levels where in early 2022, when there was lots of excitement regarding potential bid speculation, which obviously never came. Moving along to a stock which I don't normally look at, but because it's just it's a blue chip and not one of the small cap babies, but couldn't resist looking at BAE Systems on the basis of the bear trap island reversal, so gapping down back in November and gapping up today. We've gapped up through the 200-day line at £12.85. Above that, looking for the top of that rising trend channel, as high as £15.30 by the end of next month. And I suppose after the massive bull runs that the stock has had, it's actually quite nice to have potential opportunity to get on the geopolitical aerospace defense bandwagon. The final piece of the jigsaw, which is a great one, is the way that we've had an RSI rebound above neutral 50, so that's a leading indicator on the upside, as is the way that the 50-day line is now rising after today's move. Moving on to Chemring, which I suppose it just sounds like a potential bid stock in the making, or a stock that can be bid for. Here you can see that we've got an £850 million market cap. We've also got a bear trap island reversal. Another great setup here. I remember that the bear trap island reversals tend to be the most reliable of the lot because they've wrong-footed the bulls and then wrong-footed the bears. Above the 50-day line at 328, looking for the top of that triangle, and the 200-day moving average at £3.70 by the end of next month. Onto a stock which has come up with a prostate testing diagnostic kit, and here you can see that we've got EDX Medical in a rising trend channel. Top of the channel there at 14 pence, but actually given the way that we've gapped up, bear trap gap reversal twice now in the last, this month, we're looking for not only 14 pence, but as high as 20 pence by the end of next month. We're also in the run-up to a golden cross, which tends to be the strongest part of the cycle, so hopefully this time EDX will have its big breakout, and the market cap at 33 million, who knows where the shares will end up after their Aquis listing. Moving along to a stock which has been championed here several times in the recent past, which is Emmerson. Here we've blown the lights out of our 1.6 pence target, and we had a second target there up to 2.4 pence, filling the gap, the October gap, down at 2.4 pence. While there's no end of day close back below 1.6 pence, looking for 2.4. Very encouraging chart indeed, given the potential legal win that the company might have from our Moroccan friends. Moving on to another stock which I've given a lot of coverage to, particularly since the Trump victory, when the shares, in fact the shares rising before that. We had the rug pull the other week, and the current situation is that we're actually threatening to break out of the recent range, 90 pence to, the existing range apart from the blip, 90 pence to £1.15. If we do break out of that, a 25 pence range, then I suppose we're looking at £1.40 as the next level up, and that would be derived from a line I'm about to draw at the moment, which is heading towards 140 plus, in fact, and maybe we get that by the end of next month if there is peace in our time. Ideally, there's plenty of price action back above, or the price action remains above the 50-day line at 101. What we don't want to see is any end of day close again back below 90 pence. Good to see First Class Metals rising at the moment. Obviously, Explorers have had a torrid time on the London market, and practically everything they do or say is hated. But we've had 3 days in a row now of the shares opening at the low, closing at the high, and the Friday's closed particularly positive above the 50-day moving average, 1.85, looking for up to 3.2 pence by the end of next month, which would take the shares back to where they were back in September. Next up is stock which I've never looked at before, but again, too difficult to resist. Judges Scientific, here we gapped down in November and have gapped up today after several very, very strong candles there above the recent resistance there, 77 pence. Looking for the shares to hit 94 pence by the end of this month, actually, the way things are going. Ideally, we fill the gap up to 101 by the end of next month. Ilika is back, and I looked at this hundreds of times, actually, it feels. A double gap to the upside in the recent past. We're on our second target there, 44 pence above that, looking for up to 55 pence, and that late 2023 resistance line projection. Ideally, we stay on the right side of 40 pence. I looked at the next stock at the end of last week, K3, and here we followed through on the breakthrough the 50 and 200-day lines, looking for this stock to hit 140 pence by the end of next month. Hopefully it'll stay on the right side of a pound while it's trying to do that. In fact, ideally above the old April resistance at 104. Moving on to another stock which is on the front foot at the moment, comes in the form of Karelian, and here you can see that we've got the shares bear trap rebound from below the December support there at 1.1 pence, above that looking for 1.9 pence. Helped along, by the way, that the 50-day line is now rising, and we've had several days of shares opening at the low, closing at the high, and an RSI rebound off neutral 50, so what is not to like? On to Mony, or I suppose it is Mony, isn't it, really? A broadening triangle base here from back in September. We've broken through recent resistance of £1.96, looking for the top of that broadening triangle at £2.23 by the end of next month. And happily, we see a bounce of RSI 50, and if you look very closely, the 50-day line is also rising, so nice touch there. Onto Orcadian, which is always of interest at the moment, given that it's involved in fossil fuel activities, and they are hated at the moment by Ed Miliband. Current situation is that we are trying to break through a sharply rising 50-day moving average. It bounced off RSI 50 as well, so we're looking for 13.6 pence at the top of that rising trend channel from back in April last year, while we're above the 200-day line at 8.4 pence. On to the last few. The first one is Tekcapital, another one I couldn't resist. Rising trend channel here, and if you look closely, rising 200-day moving average. Can't quite see whether the 50-day line is rising, but it is. And looking for 13 pence by the end of next month, or even sooner, ideally by the end of this month. Perhaps all its investments or holdings will start to drag the shares higher. Tavistock is next, and here you can see that we've got an unfilled gap to the upside above above the 200-day moving average. We've got a rising 50-day line as well, and looking for the shares to hit the top of that rising trend channel from March at 6 pence by the end of this month. Upland is next, which I tweeted out, I think, the week before last. Finally looks like it's on the move, breaking out of that little bull flag. Sideways shuffle above a 50-day moving average. Minimum here, £1.55p, and hopefully up to 2.2 pence by the end of next month. Finishing off with Watkins Jones, a company which is delightfully obscure. Here we've got a mid-move consolidation, looking for a breakout here through 36.7 pence. 45 pence the initial target here, hopefully over the next couple of weeks, ultimately up to maybe as high as 50 pence by the end of next month. But the shares are quite comfortable near the 200-day moving average, and hopefully there's no break back below the latest gap at 32 pence. That's it for me today. More updates tomorrow.